It might not be what you think it is. You look at the stock market and you can be confused by what's going on. This week, the Fed are probably going to reduce interest rates. Is there going to be higher inflation? Is that a problem? Which companies are doing well? Which are going to continue to do well? Going to look at all of those things during this video and explain to you exactly what's going on right now. In the last week, the S&P is up just over 1%. You see that there's some stock doing incredibly well. Now, 37% of the S&P is down to, guess what? Tech companies. They're continuing to do well, and of course the demand for AI is increasing, if anything. Will that last forever? Well, actually no, there's a bubble, but let's explain where that bubble is so you know exactly what to invest in. You'll see gold edging higher. Can that continue? We'll talk about that, and we'll also talk about the bond market and potential opportunities right there. First of all, let's look at the stock market and see exactly what's happening. First of all, the Fed's going to reduce interest rates probably by 0.25. Of course, then they have afterwards explained why they're doing that and what they're planning to do in the future. If the words are in the direction of they're going to have further increases between now and the end of the year, market's going to take that positively. In other words, the 0.25 is already priced into the stock market. If they're talking that they're going to do further reductions between now and the end of the year, expect stock to be doing well. Does that not mean inflation's going to get higher? Probably not permanent inflation. Let me explain. The jobs figures are absolutely awful. So when the jobs figures are awful, that gives the Fed more room to move. Why? The biggest driver of inflation is wage inflation. So historically, whenever you've seen inflation go higher, it's because there's been a tight job market. Higher wages because of a tight job market leads to real inflation. So right now, yes, you've got tariffs coming through and there's some form of inflation that's affecting prices. But when the jobs market's falling off, and it's falling off quite quickly, that means you're not going to get the tight labour market that means to real inflation. Gives the Fed room to manoeuvre, means you're going to get lower interest rates. Lower interest rates are good for the stock market. Remember, right now in America, there's 7 trillion in money market accounts. Interest rates come down, some of that money moved to stock. However, you've got to be in the right stock. AI bubble, much talk about it. When you look at AI, we go back and we go late 1990s, internet. Then you talk about what, 2006, 2007, when cloud came in. Those things are still growing. People say, well, yeah, but there was a bubble and stock came down. Yes, but don't forget, companies like Amazon, Meta, they're still going and they're still increasing. So the internet is still growing. Cloud's still increasing. So when we look at AI, is there going to be companies that are using, and there's massive demand right now, that can't create revenue? Absolutely. So you've got to be careful on which companies you're investing in. That's why it's good to talk to a financial advisor. But there are some companies which are taking massive advantage and set to continue to do so. So again, I look at core companies like Microsoft, like Alphabet. Those companies are going to continue to do well. Yes, they're spending a fortune on AI, but they're in a position, same as Meta, where they've got so many clients, so many customers, that reality is they can get that money back. Other companies, more speculative. I'm not saying some of them are not going to win, but I am saying that 90% of them will fail. Why? That's the stats on the internet. When you actually had that first cases, 1990, 90% of companies didn't make it. Same thing with cloud, 90%. AI, guess what? It's going to be the same thing. So think about companies that got lots of customers, got lots of clients. Yes, they're spending money, but right now they're in a position whereby, because they're building that infrastructure, more expenditure, but they've got such a great client base, they are going to continue to grow. Of course, the market could be volatile. Why? There's so many things in the stock market that affect it, from politics to wars to all types of things. So expect volatility. You've got to be a long-term player, long-term investor. Gold, is that going to continue? Well, of course, you're in a world where there is uncertainty. China, India, they're buying gold. Other countries buying gold. Does it mean that the dollar could potentially go down further? Yes, it does. Gold is becoming, right now, more of a reserve currency. In other words, countries are buying it just to make sure that they have got reserves instead of buying the dollar. So when you're investing, just realize currency matters. You've got to make sure you're investing in the right area, and you could be making 10% in dollars. But if you live in UK or Europe and you're 10% down on the currency, that's no good. Again, talk to an advisor to make sure you're in the right sectors to gain the best returns. What's going to make money right now? Some tech, diversify, bond market, interest rates come down. Then, if you've got a good bond fund that's investing in the right bonds, and then that bond fund can do well. deVere's got one which invests into large companies, successful companies, and you could be making 6-7% on a regular basis with lower volatility. So remember, when you invest in stock, you're likely to do better, but it might give you perhaps palpitations. And that's why some people prefer a steady return, and that's what you're getting in bonds. Right now, it's not time for leaving your money in cash. Okay, why? You will have some inflation. You got it right now. And if it's in a bank account, guess what? You're likely, in real terms, to lose money. And make sure you take notice of what's happening in the market. Subscribe to the YouTube channel to get ideas, and I'll keep you up to date with the best investment for you right now.